So, GameStop. I'm sure we've all seen the news by now. We got the subreddit Wall Street Bets all over TV, and we have huge hedge fund investors losing billions of dollars in less than a week. What the heck is going on? And should we be buying into stocks like AMC and GameStop? In today's video, we're gonna get into just that. Don't forget to destroy that like button and comment down below any videos that you guys would like to see. I'm here to provide as much value as I can to all of my young investors and to really document my journey as well. So with that being said, let's get right to it. As we all know by now, GameStop is a store that sells tons of video games. They were actually the go-to business before the internet really hit. I remember waiting in line for at least an hour to buy Call of Duty Ghost back in I think 2013. But anyways, these guys started to really tank when online ordering took over. I mean, why go wait in line if you could just order the game and it'll come right to your door? GameStop really let this opportunity slide right in front of them and didn't go all into their online store. As a result of this, they've suffered, and bad. They've been closing hundreds of stores for years now, and obviously, this is leading to one thing, eventually going out of business. But I want you guys to remember this. Even in the worst of times, money is still somehow being made. So with GameStop leading pretty bad, the sharks started to circle. Those of course being the hedge funds. Hedge funds are big firms that are absolutely loaded with billions of dollars to invest. These guys are what make markets go up and down. When they buy or sell, they do it with billions of dollars. In the financial world, these are what we call whales. What a bunch of these hedge funds decided to do is short GameStop. They were so confident that GameStop was going down that these guys bet billions on top of billions of dollars that it would happen. So what does shorting a stock even mean, and how do people make money doing this? Short selling, put as simple as possible, is when somebody borrows stock at its current price and immediately sells it with the hopes that the stock will eventually go down. If, and only if, the stock goes down, the person buys it back and gets to keep the change as profit. For example, let's say I hypothetically want to short a stock and it costs $10. I'll borrow the stock from somebody at $10 and I'll immediately sell it with the hopes that the stock is going to go down to $5. If the stock goes down to $5, then I'll buy it back and then keep the other $5 as profit. That's short selling in a nutshell. Now, this really starts to backfire when the stock does the opposite and instead starts to go up. Those $10 that I borrowed are now worth $80. And guess what? I gotta pay that money back. So what I'm gonna do is I'm gonna buy again at $80 so that I can limit my losses and just completely get out of the trade before I start to lose even more money. Since now everybody that bet that the stock's price would go down is struggling to buy, close their position, and get out. This exact situation is what's called a short squeeze. I think we can all agree when I say that paying 80 bucks isn't even that bad of a loss. But remember when I told you guys that these hedge funds play with billions of dollars? Well, yeah, that's exactly what happened in this situation. So when a certain subreddit community called Wall Street Bets noticed that a lot of these hedge funds were betting big money on the price of GameStop going down, they all collectively decided to buy the stock and push the price up. And that's exactly what happened. GameStop stock went from $40 to over $400 in a matter of days. This was so out of left field and so unexpected that it caught all of these hedge funds completely off guard. These guys got completely blindsided. They lost billions of dollars in a matter of days since their bets were on the stock falling, not going up another 1,000%. Melvin Capital, one of the biggest hedge funds that bet billions of dollars against GameStop, lost over 30% of the total amount of money that they managed in a couple of days. This comes out to be about $3.6 billion in losses. That's a lot of bread. Let me put that into perspective for you guys, since 3.6 billion is just such a high number. If we were to save $100,000 every single year, it would take us about 36,000 years to get to 3.6 billion. Or better yet, I got another one for you guys. If we were to save $10,000 every single day, it would take us nearly 1,000 years to get to 3.6 billion. Now, I don't know about you guys, but that's just crazy to me. The reason this story is all over the news is because it's looked at as a big middle finger to all the big players. A lot of these quote unquote industrial investors gambled with the US economy back in 2008, which in turn caused a huge recession that almost got the economy to collapse on itself. And the craziest thing about 2008 to 2010 was that just about nobody went to jail for it. On the contrary, a lot of these hedge funds and banks actually got bailed out and walked away completely free from it. I actually remember around 2009 going door to door handing out business cards with my dad, since there was literally no work, which I talk about a little bit more on my How to Invest at 13 video. And there's also a movie that you guys can watch called The Big Short, which goes in depth at what happened back in 2008, 2009. I highly recommend that movie if you guys are interested. So that's basically the gist of what's going on with GameStop and all the craziness that's been going on in the news this past week. And things are still going on as I make today's video. So we're really gonna see what happens in the next coming days. But the question is, should we buy stocks like GameStop and AMC? In my personal opinion, hell no. You see, when the forced buying stops and the price of the stock gets way too high, people are gonna start to unload the stock and cash out. This is what eventually sends a price down. I personally think, and again, this is just a theory, that a lot of other big hedge funds started buying in with everybody else. If this happens to be true, these guys are gonna start to unload eventually and things are gonna start going way downhill. I know this whole GameStop situation seems crazy, but this has actually happened before. You see, these hedge funds actually use their money against each other sometimes. What I happen to find a little sketchy is that now, when the smaller investors cause a short squeeze, there needs to be more regulation and brokerages need to stop trading. I think I need to call it how it is. These guys are just protecting themselves. They're hurting, and they're hurting bad. But in the meantime, that's it for today's video. I hope you guys enjoyed and found value in today's upload. I try to make things as simple as possible for all of us so that we could all be on the same page. So I hope you guys enjoyed. And with that being said, beat the odds and do the numbers. I'll catch you on the next one. Peace.